Hello, and welcome to In The DeNovo, a series of video interviews with today's thought leaders on everything to do with treasury management, product management, and instant and faster payments, covering topics from payments to industry trends and other exciting subjects coming in the future. I'm Will Grace. I'm the host, founder, and managing director here at DeNovo Treasury. We're a consulting firm focused on helping financial institution leaders define strategy, transform client experience, and grow revenue in the treasury management space. Thanks for joining us and staying in the know with In The DeNovo. Hello, this is Will Grace, host of In The DeNovo and founder and managing director of DeNovo Treasury. I'm pleased to welcome to our program Len Devaisher, president and CEO, or COO, of MidWestOne Bank. I gave you a promotion there. With headquarters in Iowa City, Iowa. Len is a blessed husband and proud dad who enjoys travel, nature, and learning. His leadership philosophy is built around head and heart, listening, cultivating trust, and belonging, fostering a growth mindset with accountability and support, reflecting, celebrating, learning, and inspiring commitment and collaboration. He has a deep experience in commercial lending, building teams, and sales management. I've been fortunate to get to know Len over the past year as a client of DeNovo Treasury, has become a trusted colleague as well. I'm honored that he's agreed to join us on In The DeNovo. Welcome, Len.
Thanks, Will. Good to be with you.
Yeah, appreciate it. And it's not often that I get to have clients that join me. So this is a unique experience for us, and all of our listeners and prospects and clients are appreciative of you joining. So first off, and it'd be great to hear about your journey in banking and how you got to where you are today.
Well, again, thanks, Will, and I'm glad to be here, especially given the discount you promised on future work we do together. So really excited about that. But
yeah, and I gave you a promotion. Hopefully Chip doesn't hear this.
Yeah. So my career in banking, actually, I signed on to the banking industry about 24 years ago. When I got out of school, my first job was in sales for ADP, and then I called on bankers, and one day a banker called on me, and I signed on as a business development officer for the commercial banking team for Old National. Then kind of across the years, I became a RM in the commercial team, really focusing in the C&I space. Moved to another market, to Indianapolis, where I was a lender, and then I became the team leader for the commercial lending team in Indianapolis. Then I moved into a different role back at headquarters. I led our branch banking and mortgage and indirect lending operations and those lines of business. Then back to my background in commercial, led our commercial banking, structured finance, treasury management, including merchant services and commercial support lines. And then Old National acquired Anchor Bancorp in Wisconsin. So I moved to Madison with my family and led that integration. And then I was the market leader for Old National in Wisconsin. And then about 3.5 years ago, I moved from one Big Ten town to the next, from Madison to Iowa City, to accept my current role with MidWestOne.
Yeah, talk about moving from one defensive school to another, right? I mean, the teams that pride themselves on defense, schools that pride themselves on defense. Wow,
Absolutely.
That's quite a storied career, and you've certainly had a lot of background in areas that touch treasury management. You mentioned treasury management and C&I in particular, which is a huge place for places that we talk about growth in treasury management, of course, and I want to focus on treasury management today. And it's not a term that everyone's familiar with, and it's somewhat unique in our industry. And I struggle with explaining that when I talk to people about what I do, even when I talk to small banks and small FIs that are emerging in the space, they don't always use the term treasury management, or they kind of have to grow into the term treasury management. And years ago it was cash management, and now it's treasury management.
Right.
And I don't know how do you define it? Give us a definition of treasury management.
I define treasury management as a tool set. Treasury management is a tool set to help business decision makers efficiently and comprehensively understand, optimize, and protect their cash position. I mean, we all know it doesn't matter what business you're in, cash is king. Cash is the grease that keeps the wheels turning. It's the lifeblood of the business. And so treasury management, first of all, helps business decision makers understand. So where is the money, but what is the money for? So as I think about business owners keeping track of all the ins and outs and planning for their future, being able to do that in one way in real time. That's number one, to see it, to understand it. Number two, to optimize it. Of course, you think about what we do as banks, which is fundamentally, we help people store money, we lend people money, and we help people move money. And so treasury management is critical in that movement of money space. And when you think about a business, we're really thinking about that working capital cycle, right? How do they accelerate collecting receivables, which means not only getting the money in the door faster, but then crediting it to the correct accounts, right? All the information that goes around with those payments. And then on the other side, on the payable side, how do they optimize when and how they pay their vendors in a way that maximizes their working capital, that lifeblood. And then finally, it's sad how important this is, but it's very much growing importance, and that is protect their money. We see fraud as an industry. We see that on the rise. And so that treasury management tool set really becomes more sophisticated ways to help business decision makers protect their capital, to make sure when they're moving money that it's getting to where it actually needs to go. The bottom line, I think, and I learned this as a banker early on, treasury management was really my secret weapon, because when done right, and that's a key, but when done right by professionals, it really unlocks tremendous value for business decision makers.
Yeah, and that's important. You talk about it being done right, and I think that when you're talking about financial institutions that are growing, right? How does that play into a growth strategy at a financial institution that's growing?
Well, I can tell you at MidWestOne, we have featured treasury management as one of our key levers of growth. And it really goes down to what is the franchise value of banks, and that is our core deposit strategy. So I see treasury management as a powerful tool to grow not just grow deposits, but when we talk about growing deposits, I think it's important that we get precise. So when we think and talk about growing deposits, we're talking about growing core deposits. And when I say core, I'm not talking about $1 limit, on a call report or something. When I say core, I'm talking about relationship deposits, not just transactions, not so-called hot money, not broker deposits, none of that stuff. I'm talking about relationships. And treasury management, because it is such a powerful tool set for business owners, it really does allow us to enter into their day-to-day operations in a way that really does save time, save money, and maximize their position, optimize their position. As we think about treasury management, I think it shows up in the bank's results in a couple of ways. Number one, think about growing non-interest-bearing deposits. And number two, as a key fee income driver for our business.
Yeah, so the impact that it has on a financial institution's offering and the ability to attract deposits, and that's really, I mean, you're saying it's actually it's a part of your growth strategy. It's part of your ability to attract clients and their deposits, right? I mean, this is a key factor.
Absolutely. One of the ways, Will, as we think about treasury management is, and we talk to our bankers about this all the time, the the typical pattern, I think, too often is when people think of banking, they tend to think about borrowing money. And sometimes our bankers think about that too, right? Really
Right.
lead with the credit product. But we've found the most successful relationship managers, the most successful bankers are the folks who bring the entirety of the bank to the customer and the prospect. So nirvana for me is when our bankers and our treasury management sales officers are arm in arm on every prospect and every customer, that at one time in a comprehensive integrated way we can help our customers with both sides of their balance sheet. I think about that tool set I defined treasury management as earlier, and I think about how it drives growth in my view, because a tool set is really about optionality, about having more ways for customers to reduce their expenses or to maximize their return, or maybe to manage their risk as they think about, FDIC insurance limits and things like that. All of those issues, or I think on one of your earlier podcasts, you had, was it Chris, talked about jobs to be done? Is that right?
Yeah. Right.
That whole idea about the jobs to be done, treasury management tool sets are the tools for those jobs to be done.
Right. So you mentioned you've hit on something that can be an issue for smaller financial institutions as they are looking to move up market and move into treasury management and improve those tool sets. And that is the interaction between a commercial lender and treasury management, that dynamic there. And sometimes the lenders still being of the old school of thought. Yes, yeah. I'm a lender. I'm going to go out and lend, and not having that mentality that there are other things that I can bring into this relationship. How has that transition, over time for you? Have you been able to manage getting lenders to change that mindset, not just at MidWestOne, but maybe also in other places in your career?
Sure. Well, first of all, it does remind me that language matters, right? So
yeah.
when I started, we probably introduced ourselves and talked about being a commercial lending officer. But we now talk about being a commercial banking officer or a relationship manager. And I think that language is important because it reminds all of us that if we're doing our job well, really adding value to clients, it's not just in the narrow niche of providing credit products. It really is understanding that customer's business and bringing all of the bank, everything they need and nothing they don't, all of the bank to bear to help solve problems and set them up for success. That's what our task is. I think when I think about things that have helped us progress on that journey, and it's always, a work in process, but I think about how we run our sales meetings and how commercial bankers and treasury management officers are together. I think about how we define people's goals and incentive plans and their measurement and expectations, right? We talk a lot about inspect what you expect. And so that joint calling and that partnership, I don't know a better way to do it.
Those are great points. And I like the one that you led off with about labels and naming. Certainly something that over time I've talked to my clients about. Can't call somebody a commercial lender if you want them to be more. And certainly commercial banker or commercial or relationship manager. Those are the terms that really start to resonate and get them outside of just being a lending officer. I think those are all in the points that you're making with, being hand in hand and goals setting and presenting and being part of a team. I think that's really great points that you're making that, our clients and prospects need to hear. So thank you. Those are really valid points. So for a growing financial institution, how would you suggest that they best leverage treasury management to help meet client or member goals, knowing that some of my prospects might be credit unions? I got to be mindful of that.
Sure.
Member goals.
no rocket science here, but I really think, Will, there's two things that we have to keep in mind if we're thinking about treasury management as a strategy. And those two things are, number one, client focus, and number two, intentionality. What do I mean? Well, client focus, first of all, I think listening is the secret sauce of good client relationship management. And so that really means that it starts not with us telling them what we can do for them or some kind of show and tell of all these products. It really starts with our bankers and our treasury management officers sitting down and understanding the client. What's going on in their business? What are they trying to achieve? Where are their pain points? All of those things, that's the foundation. And then from that, then what we ask our bankers to do is bring their expertise to bear. At our bank, we recently went through our strategic planning process and we rolled out a new vision statement. And our vision statement is to be the preeminent relationship-driven community bank where our, here it is, expertise and proactive approach generate meaningful impact for our stakeholders. So I really think about, when I think about treasury management and that as a growth lever, I think about that expertise. It starts with listening and then bringing the expertise, understanding the right things to do, and then that proactive approach, not just reacting to the customer, but actually bringing value to the table by asking good questions and bringing good ideas to bear. So it's that client focus. That's number one. And then when I think about the treasury management business, and Will, you know this better than I, but I see it as one that you cannot drift into. And what you were doing 5 years ago or 10 years ago is not going to cut it today. That's my view. It's a very competitive landscape, and I think the payments space brings that up in very stark relief. It really shines a light there. So when I think about treasury management as a growth strategy, I think about intentionality of, you know what, I have to define a roadmap. I can't just react when I'm in front of a customer or a prospect and find out they have some needs that I'm not equipped to meet. I need to really take a view of the competitive landscape. I really need to think about the process. One of the things that happens in banks is we're really good at designing processes to make sure we do things accurately, not always so efficiently. And so as technology evolves and changes, I think we have to keep revisiting those processes. We've got to make sure we have the controls in place, but also that we're delivering the product and the service in a way that most of all is good for the customers, is good for the employees, and gets the job done. And I guess when I think about all of this, I think in our business, which is fundamentally a commodity business, right? We all pretty much do the same kinds of things, maybe a few differences around the edges, but more or less it's the same. So then the only differentiator becomes talent. So when I think about intentionality on treasury management, I think about the need for that roadmap, a very clear roadmap, and you have been very helpful to MidWestOne with that, and then really having the right talent on board across the treasury management organization. That's the key of how we bring that expertise and proactivity.
Yeah. So we talked about process, product, people, right? And that's so there is a piece of this where you do have to have the right products and services that the relationship will take you far and the people will take you far, but at some point you do have to have the right products and services, and so you do have to make some choices about where you're going to invest in those things. And how have you gone about trying to make those decisions as a growing bank about where you're going to invest those dollars? As you can't be all things to all people, right?
Right.
You can't. You're not going to compete right away with all the large financial institutions. You kind of have to pick and choose your battles. How have you found that for being a becoming a mid-sized financial institution? How have you been making those decisions?
Well, I'm going to say no rocket science here. But the first thing is to realize I don't walk in the room thinking I'm the smartest person in the room, right? So I need help, and that's really, Will, how you and I connected, being introduced through a former colleague of both of ours at prior different shops, and so I think asking and getting good help really is valuable in all of this. The other thing I would say is it's pretty straightforward of thinking about, where are the gaps that I have between where I am and where I need to be, as I think about the business I want to go after. And then what is the price of admission, so to speak, of how I'm going to close that gap. And so sizing those up of what they mean in terms, and this is where the roadmap matters, right?
Yeah.
What is it going to take to close that gap? What am I going to get for that? But the other one that's super important is, how is this setting the stage for what comes second and third? I think having that really comprehensive view is super important, and because we all have to make trade-offs, right? There's some things I want to do everything, but I can't. So staging it up in the right order, I think, is critical in the treasury management space.
Yeah, couldn't agree with you more. And so, thinking about that, and then kind of thinking about kind of segmentation and how you approach industry segments or verticals, how a financial institution goes about investing there and growth and treasury management there. Are there certain ones right now that are kind of standing out to you that you feel are good industry segments or verticals that are ripe for treasury management?
Well, I would say a couple of things. One, you and I talked earlier in the conversation about how valuable and critical treasury management is for C&I lending, and that's certainly at MidWestOne, like it is for so many shops, growing C&I because of what the lifetime value of those relationships mean. That's very important to us, and that can't happen without TM. So generally speaking, I think about C&I. Getting a little more specific, when I think about property management companies, title companies, nonprofits, agribusiness, those are a few examples where I feel like treasury management can be a real value add and differentiator.
Any words for emerging, aspiring financial institutions that are like starting to try and plan for treasury management? They need to grow. They're not quite sure where to start.
I think the first thing that comes to my mind is, and this will be, I think, a lot of my financial institution colleagues in the industry will relate to this. I think we have to be very careful and sensitive to core dependency and how much that can become an obstacle and a barrier. And so sometimes what may feel like the fastest route, which often the assumption is the fastest route is to go with the core offering and plug it in and so forth. Those don't always connect and plug and play as easily as people, I think, assume. And so I think probably the most important thing, it's like every other part of our business, I think it's super important to get outside the walls. What do I mean by that? I think I think having meetings with vendors and prospective vendors to hear what and realizing they've got an agenda, right? But I think we can learn things in those conversations. I think peer groups are very important. Finding colleagues how are they answering some of these same questions, and what vendors have really brought value to them and so forth. I think that can be very helpful. And then, being outside of the walls, the most important thing I think we can do is time we spend with our customers and our prospects to really get a sense of what they're thinking about, and then thinking about, okay, how can I come alongside them and really add value to what's going on in their world.
Very good advice. And I'll harken back to something you said before, as you're saying, listen to vendors, but also remember they have an agenda.
Yeah.
Remember that piece. which was advice you gave earlier. So there are many predictions suggesting tough times for small and mid-sized community banks, over the next 2 years. What do you think we'll see from treasury management and deposit growth in the next 24 months?
Well, here's what the operating environment I think is a challenging one for a few reasons. One, macroeconomically, right, with the interest rate environment, rates going up as far as they have, as fast as they have, that's put a squeeze on a lot of us, and that includes us. The silver lining in all of that is I think it's reminded us all of the importance of the core value of the franchise, which is deposits, and therefore reminded us of the value and impact and import of treasury management. And so it's actually, I think, an opportune time, challenging operating environment notwithstanding, to think about investing in this as a key lever for the deposit franchise. I will tell you overall, when I think about MidWestOne's plans and outlook, we definitely see treasury management as a growth line in our company. And then I would also say from a depository perspective, we've seen deposits stabilize now and seeing a modest uptick in customer deposits. And that's our expectation as we go forward. It's hand-to-hand combat, as we say sometimes.
Yeah.
It's a competitive environment. But you know what? That just makes us all better.
Well, Len, this has been extremely informative for DeNovo Treasury and our clients and prospects and subscribers. Did you have anything you'd like to say in closing?
Well, I just really do appreciate you having me on, and I would just thank you and DeNovo for the partnership you brought to MidWestOne to help us think about our strategy, our roadmap, our process. It really has been helpful to us to put the pieces of the puzzle in place to really up tier, go to the next level, and we're grateful and excited.
Oh, we're appreciative of the partnership as well. It's been a great collaboration, and one that is exciting. We always learn from our clients as much as we give. So thank you for joining us today. And to all of DeNovo Treasury clients and prospects and subscribers and listeners, thank you for tuning in to In The DeNovo, and have a great day. I love it when a good conversation comes together. We are so lucky to have friends willing to sit down and talk with us about the industry. For more content like the video we shared today, check out our website at denovotreasury.com and our YouTube channel at DeNovo Treasury. Thanks for joining us today for In The DeNovo. See you next time.